What is going on, investors? Hopefully you guys are doing well out there. It is Friday. It's the weekend. I've got some fun stuff planned with my two sons this weekend. Hopefully you have some fun things planned as well coming up for your weekend. But before we get to all of that, it is Friday, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we actually saw NVIDIA shares go down. We've got a lot of news related to Apple and Amazon and Tesla as well. Better kick things off like we always do with Meta Platforms. Start of the week at 496, one of the few stocks that basically went sideways this week. You'll see it technically just kind of drift sideways to 495. We'll call that. Now, the Surgeon General is calling for a warning label, not on cigarettes. Those have been there since the 1960s. We're talking about social media sites, as the Surgeon General is citing a mental health crisis in this country, particularly among teenage kids 13 to 17, which happen to use Google's YouTube, which is where you're tuning in right now. 90% of teens that age use YouTube, TikTok, also very high usage. Snapchat as well. Meta's Instagram right up there, while as we've seen Facebook usage, which is a site I haven't logged into in a while, that has plummeted in usage. And you have sites like X and Reddit, which are more or less, I would say, more like something that you get into when you're a little bit older. Those are used very little from teens. Now, the Surgeon General is citing a 67% decline in the rate of smoking after the government body added Surgeon General labels to cigarettes nearly 60 years ago. Will it work with social media? Is this something that we need, or do parents need to be more responsible with the apps and social media sites that their kids are accessing? I guess we'll answer that question another time. Moving on to Apple. Start of the week at 213.59. This one down pretty sizably. You'll see it technically down over 2.8% finished week at 207. We'll call that 50. Now, really interesting story here. Apple supplier TDK, which makes batteries for some of their devices, they're saying they developed a new material for a next generation battery, and this will go into wearable devices, things like the earphones, also obviously the Apple Watch and other types of things, maybe even new devices that we aren't even aware of. Seems to me maybe you're going to be able to shrink the form factor, which we'll talk about here in a minute, with the Vision Pro. A new battery technology won't require you to be tethered to a battery, and maybe make the devices look more like a pair of sunglasses or an even cooler pair of ski goggles, if you will. Now, the company is saying, this is TDK, saying that the battery has 100 times greater energy density than conventional solid state batteries. That's interesting. They're also saying that these new batteries are extremely safe and they reduce environmental aspects. And I tell you what, that is music to the ears, and this is probably worth looking into a little bit more. I've got this bookmarked, something I'm going to look into over the weekend. Now, next, Apple Watch, likely to have larger screen size. That seems to be a trend. Also, 3D printed materials. We talked about this. This was a press release, I want to say several months ago, where Apple was testing 3D printing the casings. Not necessarily saying this is what Apple is going to do, but they were testing 3D printing the actual case backs. And 3D printing is something that we've talked about broadly here on the channel, and that it's a technology that probably has finally come of age, if you will. And this happens all the time in the stock market, especially in the technology sector, where you have, 3D printing gets hyped up. Several years ago, 3D printing stocks were kind of all the rage, and then they get kind of washed out. AI will maybe have some aspects to that, where parts of the AI is maybe a little too hyped up, but it's something that might come of age down the road. 3D printing, I think, is there. They're citing reduced cost and the fact that 3D printing could cost less than traditional manufacturing. As it turns the corner there, that's also very good. Also, you have the reshoring trend, or the moving away of manufacturing away from the country of China. That also plays in the hands of 3D printing. It's one of those sectors that has been beaten down so much, but I think Apple and other companies as well, they're starting to move in that direction. Certainly some interesting investing opportunities there. Now, talking about that Vision Pro, they're suspending, and this is Apple, work on another high-end. If it wasn't high-end enough, I mean, this thing was $4,000. I was very opinionated when this thing came out. It was too expensive, and it just simply didn't do enough. So they're going to pause, and I think this is the right thing to do from Apple, is you don't need to make this thing any more high-end. You actually obviously need to reduce the price, maybe even reduce some of the feature sets. The form factor, I think, is cool. I think it will continue to slim down a little bit. I don't mind the form factor at all, but the fact that you have this wire with a battery and all those types of things reduces the usefulness. Obviously, also, the near $5,000 price tag just isn't going to work for most people. Now, Apple is ending its buy now, pay later service, and it's partnering with Affirm. It already had, I think, maybe some partnership with Affirm, but this is really interesting. I would not have guessed this, that Affirm has some kind of competitive advantage that Apple just could not find. Could be that Apple just doesn't see any profits and it's not really worth the trouble, and you might as well partner with Affirm or maybe even other one of these buy now, pay later services. It could be that Affirm just has some secret sauce. I just simply would never have guessed that. So if you have been buy now, pay later with your Apple Pay, well, now that is going to be partnering or being powered by Affirm. And Affirm is a product that I've used in the past. I really, really like it. Economically, from a stock perspective, I think you've got to pick your spots with it, but the company is doing some really interesting things. Now, Apple is going to make concessions allowing rivals to access more of its contactless payment technology. This relates to the previous story, as you have payments via NFC, kind of like Apple Pay and those types of things. Well, you're locked into Apple's ecosystem, obviously. What's going to be interesting is if other companies like Affirm can access your buy now, pay later access your Apple Wallet without having to partner or have a formal partnership with Apple. Other banking institutions, the JP Morgan Chase, maybe even like a PayPal, could potentially get access to this, maybe create innovative products that can work around Apple's kind of walled software garden, if you will. Now, Apple's going to delay the release of AI features. This is a big story in the European Union due to regulation. So heavy-handed regulation on privacy could be viewed as a good thing, could be a bad thing, but that regulation is going to pause really all of the key features that we saw, I believe it was last week or the week before, at Worldwide Developer Conference. Apple Intelligence, all of the AI features, more or less. iPhone mirroring, which allows you to access your phone on a Macintosh device, essentially mirror the screen on a different device. SharePlay, all of that stuff is going to be blocked from EU users later this year. Again, regulation, it can protect your privacy, but it also maybe keeps you on the outer edges of technology. Moving on to Amazon, start of the week at 181. Boom. This thing up over 4% or nearly 4%. Finished the week at 189. We're approaching a 52-week high on Amazon. Now, the company is accused of an audiobook monopoly in a class action lawsuit. Amazon has a large audiobook business, and what they do is they lock authors in by charging higher distribution fees for not having an exclusive listing on their audiobook website. I think this is one of these cases that Amazon's probably going to lose, and I think they should. If you're an author, you should be able to have your audiobook anywhere and not be subject to different types of fees for exclusivity. Now, Amazon's farmer subscription service is going to extend to Medicare. So if you're on Medicare, which is more than 50 million people here in the United States, Amazon has this thing called RX Pass, which I've only kind of surface level looked at on the Amazon website, but apparently it accesses or gives you access to fast and free delivery of over 60 eligible prescription medications for $5 a month. So you pay $5 per month for access to RX Pass, and then Amazon Pharmacy offers 80% discounts on generic drugs and up to 40% discount on brand name medicines for their RX Pass members. So you're not paying $5 a month and just getting free medication. You still have to pay for the medication. And in this case, you're going to have Medicare potentially foot the bill there as well. This could potentially, obviously with Amazon, they've got the world kind of at their fingertips, but obviously when it comes to medication, if they can really lock it in there, if you know a person's medication and what they are taking medicine-wise, well, it obviously also gives you a lot of insight into the kind of things that person could potentially shop for as well. Now, Amazon's labor union is joining forces with the powerful labor union called Teamsters. Talked about this last week. That labor union is coming in strong for Amazon. So this is going to be a big maybe put in air quotes, a challenge. This could be a good thing long-term for Amazon. They negotiate a decent contract, locks in employees for several years. Maybe Teamsters loses some negotiation. Maybe it kind of delays some things for Amazon. Ultimately, the company is going to have to continue to invest in automation and machinery that reduces the number of human employees that are required, and Amazon is certainly doing that. Now, Amazon-backed Anthropic, which is an AI company, releases its newest cloud AI model. Looks like they're on I think they released their model just a couple of months ago. This company's on a 3 or 4 month release schedule. And really, I think what we're seeing here is just fine tuning. Every time I go to these AI models, are they a little bit better than the time before? Yes. Are they certainly notably faster as well in terms of returning results? Yes. Are they better at specific tasks every once in a while? Certainly. But we're starting to get more iterative rather than innovative with these new releases. And that's certainly something that happens with technology. Now, this is a big story as well. Amazon plans to upgrade Alexa, which I think all these companies are going to have to do. All these kind of quote, generative AI, open AI type of voice assistants like Siri and Alexa, well, they came before kind of the next generation technology, so they are going to get upgraded. But here's the kicker. They might add, and this is Amazon, a $5 monthly fee. This is very curious. So Alexa is not a device that I would use or do use, but I'd be curious to see, and if you have an answer to this, let me know down in the comments below. Would you be willing to pay a $5 monthly fee? If you use Alexa a lot already and it increased its functionality, would you be willing to pay a $5 monthly fee? Maybe this is something that they roll into Amazon Prime as well. I'm not exactly sure, but I tell you what, this would be a great revenue opportunity for Amazon, and I'm speaking again from a shareholder perspective. If you can add a $5 monthly fee to Alexa and a few million people do it, well, that's money that flows right to the operating profit side of Amazon. Now, margins at AWS may contract later this year amid higher AI expenses. There's also a lot of AI competition. I've seen a lot of price concessions over at AWS. Friends of mine that run applications, AI applications, they're saying that, boy, the price wars between Google Cloud and AWS and Azure, and then there's several startups as well. It's keeping prices relatively low, so you're not able to have that kind of margin expansion on the pricing side. We'll certainly see that later, probably next month when Amazon reports earnings, see if it's already something that's showing up in earnings. Moving on to Netflix, start of the week at $6.65, and this stock just keeps going up. Over 3% increase in share price up to $6.86. Year to date, Netflix is quietly up 40%. Over the last year, you're up 57%. And over the last 5 years, you had some ups and downs, but you're up 87%. Now, Netflix House is going to open up in Pennsylvania and Texas next year. These are kind of these special events and kind of experimental venues, if you will, that Netflix has. I know that right next to the MGM Grand, last time I was in Las Vegas, I think they have a Stranger Things one. I didn't go inside, but I thought that was interesting. Moving on to NVIDIA. Hold on. I got to clean my glasses here because I don't know if I've ever seen this before. NVIDIA started the week at 130.85 and it's down. How can the stock go down? It's down 3.27%. Obviously, when you're up year to date, 164%. And over the last year, you're up 198%. Taking a little bit of a breather, probably a good thing. After the 10-to-1 stock split, we're sitting at 126.57 on NVIDIA now. They are pushing past Microsoft and Apple, at least earlier this week, in terms of the world's most valuable company. That is shocking to me. And I think it's going to take a lot from NVIDIA from a financial perspective going forward to be able to hold this valuation at the levels that Microsoft and Apple is. They have a lot of recurring business models and recurring revenue. Certainly these GPUs are being gobbled up right now, but in a year and a half, 2 years from now, is it going to be at the same pace? And that's certainly what's going to be needed for NVIDIA to hold, I think, a $4 trillion valuation. Now, Taiwan Semiconductor, which makes all of the advanced semiconductors in the world, more or less, mulling price hikes for its 3-nanometer process. This will also affect, I believe, the phones. Like the iPhone is on this 3-nanometer process, as they're going to raise the price of that by over 5%. Other advanced packaging prices are expected to increase 10 to 20%. We've seen several comments from not only management over at TSM, but also analysts as well, saying that TSM needs to jack up the prices while chips are absolutely on fire. Now, the company is agreeing to acquire a software startup called Shoreline.io. This is one of these companies that kind of automates different types of database and maybe server errors that you might have, allows you to fix different types of errors. They're doing it on the CPU, but also the GPU. Just kind of an interesting piece of software that NVIDIA has now gained access to. And one of the founders there is a former AWS executive. Now, insiders at NVIDIA sold off $700 million as they've seen their equity grants at the company absolutely skyrocket over the past couple of years. I mean, if you started working at NVIDIA like 4 or 5 years ago, you are easily a multi-millionaire at this point just based on your stock grants. And so no one is going to blame these people. In fact, this is exactly what they should be doing, selling their shares, enjoying all of the work that they've done over the past couple of years to bring NVIDIA to the point where it's at. Cash in, go buy a vacation home, buy something nice for your wife and your family and your kids. And you out there as a retail or average investor, we're all average. I'm not saying that I'm not either. We're all average investors. Don't be scared to take profits as well, as I have a weekend planned in the mountains that was brought to you by NVIDIA. And if I didn't sell my NVIDIA shares then, might not be having the weekend that I'll be having with my family coming up. Moving on to Google, start of the week at 175, up nearly 2.5%, finished the week at 179 and some change. Google is launching its AI mobile app with Gemini in India with support for 9 different regional languages. The company is really all tech companies, but a lot of people pushing in to India, as you obviously have a massive population there, to say the least. HubSpot, we've been talking about it almost like it's a foregone conclusion that Google's going to make an offer. In fact, there certainly is an offer for this company. I think there was an all stock deal, as this is an over $28 billion company, and certainly shares have continued to rise as the rumors come in. But now we've got 3 potential bidders. You have potentially Amazon coming in for this $30 billion company. You have Google, and there's even a third bidder. I wonder who that is. It's got to be somebody with massively deep pockets. I'm wondering if the timing of this acquisition relates a little bit to the election, because this is a $30 billion acquisition. Now, Microsoft was able to pull off an OpenAI acquisition, and they were able to pull off the Activision Blizzard acquisition, but everybody else has been seeing their acquisition targets just absolutely get smoked and denied, especially one of this size. And so I don't know if these companies are anticipating potentially you get a change in administrations coming in November here in the United States. I honestly don't know, and I'm just going to be completely frank with you. I don't know if former President Trump gets reelected, I guess is one way you could say it. If he gets elected again in November, I don't know how he'll handle things from a regulatory perspective and allow acquisitions. You would assume more of a mainline Republican certainly would allow these types of things, but you also have kind of mainline Republicans against big tech. We know, the one thing that we do know, though, is if current President Joe Biden is reelected, we know a deal like this will face massive amount of scrutiny. Moving on to Microsoft. Start of the week at 441, up 1.8%. This is looking so pretty technically. Technical patterns don't always play out, but when they do, there's something very satisfying about that. And you'll see that when it comes to Microsoft, which ended the week at we'll call that 450. Former OpenAI chief, who was behind, I think, the initial ouster of Sam Altman, he is unveiling a new AI company, and with maybe a tad bit of irony or maybe a little cattle prodding to his former employer, as he's calling this, quote, safe super intelligence, as there is a debate and maybe even some contention in Silicon Valley and on Wall Street if AI is going to be safe or not. Not a lot of news out of Microsoft this week. Moving on to Tesla. Start of the week at 180, up about 1.2%. A lot of news for Tesla as the company finished the week at 183. Company gained as Shanghai, China full self-driving developments boosting its sentiment. I think this is probably accurate. I think here in the United States, you're just going to be bogged down by different types of regulation when it comes to full self-driving. You're going to be able to roll it out in certain cities and certain regions, but I think Shanghai and China, they're going to move a little bit faster, and certainly regions in China, and even if you only get pockets of China to be able to adopt and kind of accelerate full self-driving, well, that population center could be bigger than the United States, and certainly different pockets of the United States just cannot compare to China. And so huge opportunity there. We'll see if Tesla is able to turn that not just from kind of an advancement from a technology standpoint, but can they monetize it? Can they actually make money on it? I think full self-driving is certainly going to work, but can they monetize it and make money? And there's certainly going to be other companies there, including probably the state government, that will be competing with Tesla. Now, Elon Musk is saying that the Tesla master plan number 4 will be epic. He always says this, although his master plans have certainly proven to be very accurate. They built a high-end car back in 2006 to fund more affordable, or we'll put that in air quotes, S and X models, and then they used that money to fund, obviously, the wildly popular Model 3 and Model Y cars. Master Plan 2 was more about kind of the energy generation portfolio that Tesla has, which I think is somewhat underrated from not only a profitability standpoint, but also a growth perspective. It's one of these businesses that probably has a really long tail amount of growth, and I think they face actually less competition in the energy storage business. They're saying Master Plan 3 included Tesla kind of scaling up to a much larger business, including focusing on new markets like long-haul delivery, like their Tesla Semi, which I've seen on the roads many times here in Northern California. The next Master Plan 4 is intended to be focused on autonomous and artificial intelligence. One thing I think we're going to hear less about with Tesla, and I think most shareholders should just give up on the fact that even if Tesla is able to create, we'll put this in air quote, affordable car. A lot of people are looking for a car under $25,000 or maybe even under like maybe $28,000, $29,000, that China is going to be able to bring that to the market. But here in the United States, and I've seen a lot of research on this, here in the United States, people don't want to drive a cheap car. Average new car here in the United States, I've seen it anywhere from $40,000 to $45,000. That's a new car. Most people want to drive an SUV or a big pickup truck here. Now, I know it's different in Europe, other parts of the world, but here in the United States, people like their cars big, and it's a function of payment, with the average monthly payment being $735. Even when you shift down to a used car, the average loan amount is $26,000 with the average payment at $523. What I am saying is, even if Tesla were to come out with a $25,000 car tomorrow, I actually don't think it would sell nearly as well as people think, because at least here in the United States, because people here in the United States just don't drive cars under $25,000. It's just proven. Now, EV sales in Europe fell 12% in May as German subsidies and French discounts start to end. That is one thing that you have to monitor if you have a change in administration. Obviously, the current president, Joe Biden here, has laid into ultimately some subsidies, and some of that is written into actual law that is passed. So it's not like even if former President Trump is reelected that he can just turn around those subsidies on a dime, although you could have some pushbacks. Although also another wild card is the fact that Elon Musk is more or less viewed as a conservative and in some ways might be more beneficial to the former president. And so we'll see where the subsidies and the government funding of EVs and EV charging, where that goes in the coming years ahead. November is a very pivotal election for those types of things. Now, move over to the technical segment of the show where we're looking at all these lines and graphs. I mean, you've just got a beautiful uptrend, not only in the shorter term, intermediate term, obviously the long term as well. The S&P 500, you're just powering to new highs. You're expecting some kind of breather pullbacks in, if you will, on these things. These are areas where I would not be aggressive allocating to a portfolio. These are areas where personally I take profits. I go buy some other stuff, go buy some things for my family, have some fun with your money. Yes, it's cool to look at an account and see the money go up, but at the end of the day, life is short. Money comes and goes. Memories that you create with your family and your friends, certainly more valuable than just watching your E-Trade account continue to move higher. At these levels, I'm not really excited about accumulating more and more shares of this market. Moving on to Meta. Shorter term, you're in a beautiful uptrend. Looks like to me, I think, just a guess here, I think you're going to set up at the top of this technical pattern as we move into earnings season coming up in July. About a month away. I think you just kind of walk yourself up to this level up here at 529 and you sit somewhere at the level that you're at, 500, 530. You just sit there and you see if the company is able to produce something on their earnings report that blasted over the previous highs, or if it's disappointment and these are some temporary highs and you get pullbacks in Meta, like most of these stocks should be looking as a buying opportunity. Now, speaking of buying opportunities, Apple's marching its way back down to one of the first areas where if you're dying to get into Apple, 196, call it even 200, that would be your first spot. That would be a back test of the previous highs. That should act as some support for Apple as it makes its way back down there. Amazon didn't confirm a new higher high this week, but you did have a nice reversal of fortune as you had some highs back here in April, almost identical highs back in May. Here we are in June, retesting those highs. You'd like for Amazon to push above these. You push above these, there's a lot of green space as that would be pushing well above the all-time highs that we made back in 2021 on Amazon. You could have an Apple-like move where you just have these big green candles show up when you break out from previous all-time highs. Rejections in Amazon should be bought. Now, Amazon reports their earnings also like a month from now as well. The company that is going to report their earnings first will be Netflix on Thursday, the 18th of next month. These are dates that can float around and change. And we've said this for many, many weeks now that it looks like, for me, Netflix looks like it's destined to set up at the all-time highs as we head into earnings. If you get a break above that, you'll have an Apple, maybe even potentially Amazon situation where you could have a lack of sellers and this thing could just kind of go parabolic up into the $800-900 range. Otherwise, you set up at the top and you wait for earnings on Netflix. Now, NVIDIA, the uptrend is over, guys. It's over. It's time to sell. No, I'm just kidding. You are still in a broader, you're in a 6 or 7 year uptrend on this one. More specifically, I think this gives you an idea of kind of the more shorter term trend that we've been on with NVIDIA really since October of last year. You are channeling up in this direction. You're essentially right now sitting more or less kind of in this middle of the channel. This could be actually an area where if you want to, believe it or not, you can accumulate shares of NVIDIA. But again, all of that has to be under the guides that you have a massive valuation on this one and it has to continue to deliver. Any slip up with NVIDIA, and this really goes the case with all companies, but particularly one that has expanded its multiple as much as NVIDIA has over the last year. The company reports earnings and they're last to report in August. They have to deliver. Now, moving on to Google, this company has been delivering for a while. We've had kind of a different series of uptrends, but you're still in a very, very, very steep uptrend on this one. What's interesting about this one is it's holding this level at 175, 180, and it's really done that since May. So you've had about 30 days where you've just hovering at this level. Company report its earnings like most companies in the third week of next month. Moving on to Microsoft, beautiful uptrend that you've been making really since November of 2022. A few weeks ago, we said, hey, you touched the bottom of this uptrend. This is a chance to accumulate shares of Microsoft. We've confirmed that with a new higher high. Those of you that like short-term money, these are areas where you can probably take some of those, like if you had a position in Microsoft, and then you added when we talked about it. I'm not asking you to sell your, in your IRA account, but maybe you had like a Robinhood account or a Schwab account or something where you bought like 10 shares or whatever. Well, here's your chance to peel off a couple of bucks, go get yourself a nice dinner and maybe, a thank you in the comment section would be nice as well. You can always buy me dinner. I'll be in New York City and Los Angeles in the great month of August. Now, moving on to Tesla, hovering at this price range. You're just having kind of an equal pressure of buyers and sellers on Tesla. Nothing going on from a volume perspective. This company also, like Netflix, reports a little bit sooner than the rest of these companies. We'll hear from Tesla on the 17th of July. And can they announce enough to push shares even higher? I think you push up into the 200s with Tesla, and that is your chance. That is your chance to take a couple of profits because, as we've noticed many times here on the show, stock's basically gone sideways for about 3 or 4 years now. So you got to take profits when you can. Doesn't mean you need to sell your entire position. Folks, that was FAANG Stock Recap Show for Friday, June 21st. I hope you have a fun and safe weekend. And look, I don't got a lot on my schedule now, so I'll be back next week. We've got Nike earnings, FedEx, and then obviously I'll see you next Friday. Good luck with your investments.